Welcome to another RES Wave SNX update. So, whether or not you caught my live stream last night, I did basically touch on SNX and a couple of other things, mostly conversation, and also a few other cryptos. But in this video, it's purely about synthetics and the current wave count, right? So, I don't know if you remember my previous update or if you've seen it at all, but I did say that this could be potentially the first wave of a third of a third, and then that would come back and retouch on that point 618 retracement as we have done previously uh, after wave ones have occurred. And I'll actually tell you when I did the live stream, the market was right about here. This red candle was making its way down, and I didn't bat an eye, right? Even during the live stream, it was literally just part of what we do as traders, right? How we understand the markets and how we manage risk, right? You want to be making sure that your risk is in line with your trades. You need to understand what your risk tolerance is when you place a trade, and you also need to be aware that there are other things that you can look at aside from the waves. Even though I use the waves primarily, you can check out that live stream on YouTube, which, by the way, is a platform that you can upload videos to from TradingView. So that's why I mention it, because obviously TradingView likes to give us the ability to upload these videos to YouTube. So anyway, I did mention in my previous SNX update on TradingView that we would see potentially a inverse head and shoulders pattern. Now, as you can see, that type of scenario is currently playing out, right? So now the question is, will we break the highs, right? So the highs would indicate the continuation of this third of a third wave, but it's not going to be something that will go slowly. It will be something that will rapidly increase in value, in price. Price action will skyrocket up to highs. Okay. Now the target is the all-time highs. If you're not aware of my analysis, that's where we're heading. Right. I'm yet to release another market update, but my previous market update has been very clear in basically describing and outlining that we are heading for all-time highs in the stock market, in the Nasdaq, in the S&P, right? The Dow Jones, whatever it is, right? We're heading for all-time highs. Just because um, the Fed is hiking rates, right? Just because the 10-year bond yield shot up, just because the US dollar, has been exhibiting quite a bit of strength lately. My next market update will once again be a bit of a thorough one, with talking about the possibilities in general when it comes to these patterns, because they are very significant. But I do still see an all-time high first before we get another big correction, and I think it's necessary, right? The one correction that is the one that most people fear is happening now. I think it's not happening yet, and most people are wrong. Okay, I see so many funky influencers on YouTube basically saying sell now, stupid, right? And I just think those people have no idea what they're talking about, because they can't even produce a wave count to back up their claims. At least with me, I produce a wave count that backs up my claims, right? Trying to use macro and fundamentals in this environment is absolutely ridiculous, right? It is absolutely ridiculous. I don't care what anyone says, right? And to back up my claims on that, we need to go back to basics, right? And as I mentioned in my live stream, right, a lot of people tend to bag out technical analysis. Oh, because you need to know the macro, it's this and that, supply and demand, blah, blah, blah. But the thing is, every single price that you see on any chart is a reflection of human psychology, right? At the core. So price is moving in accordance with human psychology. So in its rawest form, right? Unadulterated, pure human psychology on a chart reflected in price action. Now, if you can think of anything better than that, then you have an edge. You do. Okay, you will have an edge aside from insider trading. That's a different story, and it's also illegal. But with Arius wave, it's definitely the case of understanding the waves, right? Understanding how the waves operate. Arius wave being me, being my channel, being what I do, right? It's not an advertisement, but that's my name, right? It's my surname, Arius Wave. Just like Elliott Wave is Elliott Wave, right? If Elliott Ralph Nelson Elliott was alive today and he said, I'm using Elliott Wave, is that advertising? Probably not, because we all use Elliott Wave to some extent, whether it be in knowing that moves happen in 5 waves and zigzags and blah, blah, ABC, whatever. Fair enough, whatever, right? I think it's a matter of perspective, right? People lack perspective these days, right? Everybody's hard and fast rules, they don't apply to me, right? And if they apply to you, well, you need to take a step back and think about why they apply to you and really think a little bit deeper, right? Think a bit deeper, right? If I'm trying to promote Elliott Wave, that's me like promoting the thing that you use on TradingView, right? Me promoting Arius Wave, okay, TradingView hasn't recognized yet that Arius Wave is better than Elliott Wave. Fair enough, right? Just sort of just harking back to that ban they gave me not long ago, which is completely stupid and ridiculous, right? It makes no sense at all whatsoever. But anyway, it is what it is. And at the moment, we're still in a phase of patience, right? We're patient. I did say that I moved my stop up to 3.7 on SNX, right? And we're waiting for the continuation, oops, of this trade, of this move, right? We had a wave one, bottomed in June, wave one, two, one, two, right? Wave two, 26 days for blue wave two. Green wave two, half the time, roughly 12 days, right? Now we're in wave I and double I, so wave one and two of the third wave. Um, Look, the point is that we're coiling up into what some would consider a kind of triangle pattern, right? Now, you can look at this in many ways, right? So, I've heard so many things throughout my trading journey, right? Whenever the top part of the triangle is flat and the bottom is rising, the trend line is rising, right? Usually you get a break to the upside. Okay, that's a typical thing. Why would that be the case? Well, it's probably because you're getting higher highs, right? And higher highs lead into an apex, which resolves usually to the upside. So it's just like some kind of resistance, right? And if you want to take a look at what that resistance could possibly be, right? That's fine. Let's go. Let's go to the daily, right? Now I know it's hard to do it on this chart, so I'm just going to switch to a different SNX chart just so we can just take a look at the same pattern, just with no drawings. So let's just say right now, right where we are now, we put a line right there. Okay, we put a line, we'll make it a solid, thick green line. Now, does that look like an area of resistance to you? All right, we have a few points in time where you can say that's true. 1, 2, 3, 4. Sorry, we'll start from the bottom here. 4, 5, 6, 7, 8. So, I mean, to me, that looks like, yeah, it is an area of resistance, right? Try draw another line on this chart where you get that many interactions with a horizontal line, right? Try and do it. At the moment, I can see that we are getting probably the most, right, interactions with a line across the chart. So is it any surprise that we are at this point right now where we are creating that pattern that I showed you on the previous chart? It's not a surprise, okay? Now, I don't go based on resistance, support, all that sort of stuff, but I recognize that that's what other people look at, okay? I appreciate that other people are using different methods at looking at the markets, right? Hence why I put the inverse head and shoulders pattern there, because it's a technical pattern, right? And people see that, right? We have the triangle with the kind of almost flat top. It's a lot flatter than the bottom rising trend line. Actually, that bottom rising trend line could be even it could be going even steeper if you use certain angles like this, right? Once again, I'll make that big so you can see what I'm talking about. Let's make it red, right? It's even steeper, right? If you're using these points right here, that's 3 points, right? It's even steeper. You can call that a lot steeper than the top one going almost flat, right? But the thing is that we haven't seen another high after the initial wave, green wave one. So we're coiling up here. We had an A, B, C, D, E pattern. One broke the start of wave E. That's why I said we'll probably see a 0.618 pullback before we move higher, right? And 0.618 happens to be very important in this market, right? After the June move up, we saw a 0.618 retracement. Just underneath it, popped back up, okay? And then after that, after wave two ended, according to my count, we saw the same thing. Here, 0.618 bounced back up, right? And then after that correction ended, I believe right here, once again, more recently, we've seen a dip beneath 0.618 and back up again, right? So, I mean, I'm just seeing 0.618 be very important in this market, and it's a very good sign that we're in an uptrend. Another thing I mention always, and I did last night, was that there are only two patterns that occur in markets, and they are zigzags and five-wave moves. There is absolutely nothing to suggest that this is a five-wave move, and there is absolutely nothing to suggest that this is anywhere near a completed zigzag, right? And if it were to be a completed zigzag, then why would wave C be producing this type of setup, right? It would have just produced a wave C, right? A zigzag wave C. To give you an example, which I did also bring up in that last night live stream, was what's going on with XLM, right? I actually still have everything marked out here, all right? This is a zigzag, right? It goes A, B, C, right? That's how zigzags work, right? And then you have another little mini zigzag, which I actually predicted was going to move up to, this area here, and it's still moving up since that time, right? I believe that's going to produce another zigzag, right? And then this will be another zigzag, right? And then that'll be it. Except this is not just a zigzag pattern right here. This is a CDE pattern. But you get what I'm trying to say, right? Zigzag here, right? This is how pro traders trade. They trade zigzags, short term, right? They don't like to hit home runs. Typically, they just go for singles or singles or doubles, which to me is it's all right if you're bored, if you're a prop trader, or if you have a lot of time on your hands. Yeah, go for singles and doubles. Takes a lot of practice, but you still got to know the waves, right? In my opinion, you will have an edge as a prop trader if you know the waves. So this can be applied to anything. All right. So patterns aside, a lot of stuff aside, let's just get rid of everything. Right. To the naked eye, with no labeling, does that not look like a flag? That's another thing people like to talk about. Yeah, it's a flag, right? It's a continuation pattern, right? Not always. I mean, this could be a wave 4 and then you get wave 5, but this is not you got to look at the waves beforehand, right? You can't just say, "Oh, we're going to measure like Elliott wave does, measure the you know, the correction depth and then extrapolate that up for a target." That's the most ridiculous kind of analysis possible. If you did that here and it kept going up, you'd lose literally a whole bunch of profit and you'd be mad at yourself. You'd overtrade. It would affect your psychology, right? So, the one thing that I always remember, and I always will keep repeating it time after time, Jack Schwager from the Market Wizards, the one thing that sticks out in his mind once he was asked this question is if you don't know, don't get into a trade unless you know when you're going to get out, right? I think that's key to, to trading in general, right? If you don't know where you're going to get out, don't bother getting in, right? If you get lucky, it's the worst thing that can happen to you, right? Because next time you're going to feel lucky, you're going to lose all your money, right? Especially if you have poor risk management, money management skills. Okay, so that's enough from me. This has gone way too long, but not as long as my live stream, which went for over an hour. So I suggest you get to learning the waves, understand what you're trading, where it's going, and when you should get out. So hopefully you found this video interesting and informative. Thank you for watching.